It's Thursday, September 19th, and this is Markets Daily, hosted by me, Jen Sanasis. If you are a longtime watcher of this show, you know that we navigate the crypto markets here, providing insights against the broader financial landscape. So whether you're an active crypto trader or you're just interested in the volatility that is the crypto markets, this show is your compass to understanding what's happened, where we are, and where we're going. Good morning, everyone. As you know by now, the Federal Reserve implemented a 50 basis point rate cut with expectations of further reductions this year to bring the median benchmark rate to 4.4% by the year end. Now, markets were up this morning, a really good reaction. Bitcoin broke $63,000. Other majors like Sol, XRP, and Cardano's ADA also reacted positively to the news. Now, this show is all about what will happen next. If you listened to yesterday's episode, you'll know that BitMEX co-founder and Maelstrom CIO Arthur Hayes said that the cut would trigger a brief market rally, but ultimately reveal deeper issues in global financial systems, leading to more depressed prices eventually. Now, let's level set. Rate cuts are generally seen as good. They're generally seen as making borrowing cheaper, which can stimulate economic activity. You've heard analysts on this show say exactly that in past episodes. It also means that traditional investments like savings accounts or bonds might not yield as much return, often driving investors to look for higher returns in riskier assets like crypto. But Hayes isn't the only one who thinks the 50 basis point cut could indicate uncertainty. 10x research founder Marcus Thielen wrote in his note to investors recently that an aggressive Fed rate cut could signal economic worry, weighing over risk assets, which include Bitcoin. We've invited Marcus to join Markets Daily on Monday to discuss what might happen next. If you need a refresher, Marcus is often right in his predictions when he comes on this show, so I'm curious to hear what he has to say. If we look at Polymarket now, bettors on Polymarket think that the Fed is not even close to being done with rate cuts. Bettors are giving a 41% chance of a 100 basis point cut by the end of the year and a 38% chance of a 125 basis point cut also by the end of the year. Hey everyone, did you know 52 million Americans own cryptocurrencies? That's not just a number, it's a movement, economic, social, and political. Decentralized finance, blockchain, and digital currencies are more than buzzwords, they are the future. This November, it's on us to show up and step up. We need to protect crypto to ensure it continues to fuel innovation and freedom for our families and businesses. Don't let this opportunity slip by. The future of crypto is on the line. Make your voice heard this November and pledge to vote now at standwithcrypto.org/pledge. So what does all of this mean for people who invest in crypto? On this show, we talk a lot about opportunities and what you should caution against. The rate cuts can create a fertile ground for crypto growth, but as we dig deeper, it's crucial to understand that market movements are often reactions to underlying economic conditions that could be far less stable. As analysts and experts have said, we might see short-term rallies, but it is very possible that they are followed by longer-term corrections. This is where it starts to get a bit tricky. What looks like a bull run might turn into a volatile market very quickly. So what should you do? Let's start with setting clear entry and exit points. If you're trading, establish your strategies for buying and selling. Given the potential for volatility, always have a plan. This is going to help you stay calm throughout market fluctuations. Be prepared for the long haul. If you believe in the long-term value of crypto, consider hodling through the ups and downs. Historically, assets do recover from short-term corrections. Of course, that depends on the asset we are looking at. And like Arthur Hayes told us yesterday, have patience. Don't expect Bitcoin to go to the moon tomorrow. You got to be patient in your investment strategy. And like I always like to say, diversify. Don't put all of your eggs in one basket. Consider spreading your investments across different asset classes. And listen to the experts. Like I said, our next episode on Monday will feature 10x founder Marcus Thielen. His predictions, like I've already said, have been pretty spot on every time he joins us. So I'm excited to hear what he has to say, as his insights could provide valuable context for navigating uncertain waters. If you found today's discussion helpful, please subscribe and share it with others who might benefit. I'd love to hear your thoughts on the Fed's decision and what strategies you're considering in this evolving market. Until next time, stay curious and invest wisely. As always, this is not investment advice. You should do your own research. You should speak to professionals before investing your money into any asset. That's it for today's show. Subscribe, like, comment. Thank you so much for watching, and we'll see you on Monday.